the price of gold is going to reach a level from which it will never come back because we're resetting the system.
And we're back to the Crash Labs, and today with me, good friend, Mr. Jaime Carrasco. Jaime, welcome to the Crash Labs. It's been a long time we talk. We've been in contact for a very long time. I've always thoroughly enjoyed picking your brain and learning from you. You're one of the very few people I know that understands the history of the markets, the financial, the economic, macroeconomic side. You put the pieces together. You usually, trying to piece together a mosaic of what you think is going to happen, where this ball is going to go. And it's very refreshing. And at the same time, obviously, one of the most prominent metals investors here in Canada. And you've been quite active in the space for, as long as I've been active in the space. And so, again, pleasure to have you on, and hopefully we can.
Well, thank you for having me. Yeah, no, I'm looking forward to this discussion because, as I said, I think it's important to put it into context. Back to what Ray Dalio said about the sector. If you don't own gold, you don't know history and economics. And I think it's clear that a lot of money, a lot of wealth in Western markets, I think have no knowledge of both, of either, because of their lack of awareness or interest in what I think, gold is money, everything else is credit. And what we're living through right now is 100% related to credit and what's happening with credit around the world, what's happening with Trump, what's happening with debts, and how do we resolve those issues.
So what do you think the MO is? So completely agree, and there's an interesting statistic that I'm sure you'll bring up, where Dalio says, you should have 10% of your port in gold, and he understands history, he understands economics, and that's where he's at, right? At very least. And, before we turn the cameras on, you're mentioning classically it's been as high as 30% or traditionally 30%, and right now it's under 1%.
Well, I think that goes back to today's problem, and I call it investor, cognitive dissonance.
Yeah.
Right? Because everybody's chasing returns, right? Everybody's chasing return instead of a process. And I go back to when I started in the late 80s, the Merrill Lynch course. One of the most important courses was the Dun & Bradstreet asset allocation models. And there they taught us to always, 80% of a portfolio's return is how you allocate your assets. And under normal circumstances, they always said you got to have 7 to 8% in the gold sector. Mm-hmm. Why? Because gold was money up to that point, and the whole inflation, the unraveling of the 70s when Nixon unpegs, and we have that massive inflationary storm that was still fresh in people's mind, right? Mm-hmm. And so today we're sitting at less than 1% in the sector, which is crazy. Mm-hmm. Right? And I think that's lack of discipline, lack of knowledge. And I think it's also a generational issue. Because one of the things that I have is that I was taught the bond business in the late 80s by the last generation of bond traders who have worked under a gold standard. Now, gold was traded on the bond desk, right? It was ahead of the U.S. dollar. It was the ultimate form of money. And they always banged that into my head to keep an eye on that because we were entering a different spectrum. Now, today, we have a whole everybody after me doesn't know anything about gold, doesn't get it, right? Yeah. Which is not the case with Asia and the rest of the world. They still see it as money, and central bankers, right? And I think that's a disconnect. It's a lack of both the fact that everybody's chasing returns as opposed to the right thing, which they're making a mistake, and the other one is the process of money management. So I was reading today, Tavi Costa has posted a chart about how the earnings of the tech stocks were starting to decline, but yet the money was still chasing it. Well, that's exactly the mistake of the year 2000. Mm-hmm. And we know how that ended up.
Yeah, the dot-com bubble. Right?
That's right. And Nortel in Canada, Nortel became 30% of the market, and everybody wanted to own Nortel, even though they thought it was going to go on forever.
It was like a T-bill. It turned into like a stock that people were buying as a safe, secure.
Correct, right? And so what I look at more is the historical cycles that are always repeating, right? I've always been interested in history and economics. I studied economics. I studied political science and economics. But history is something that I've had an affinity to because I think the further back we look, the more forward we can predict. And I think those patterns, those human patterns, always repeat.
You know, it's interesting. I think just to kind of take it a bit of a sidecar here, like I think what you're talking about too on the generational aspect of that phenomenon is that like when you're coming up in the industry, and you're older than me, I'm not sure, you know, by how much, but certainly another generation, we'll say. And you were exposed to you know, a generation of prior thinking, et cetera. But certainly in the age that I came up in, there was so many distractions. There was so much to learn about the world, the internet. You know, we had all of a sudden this connectivity to all of this information at our fingertips. So rather than, you know, our brains have huge capacities to digest and ingest information, but rather than ingesting history was like the first thing that was cut. We instead surrounded ourselves with all of the variety of things that are happening today and now. And so I think like that one of the things I appreciate with your generation is that you have this historical knowledge that is important and comes in where you know, like you've learned about what happened in the 80s, you learned about what happened in the 50s or the 1948, or learned about what happened back in 1930, and that was, you know, you're in thirst for knowledge, going to seek out information, and the history books had a lot of it, versus, you know, maybe my generation or those younger that, you know, they haven't dipped into that tank because there's just so much fucking available around right now in the moment.
Well, is it even taught anymore? I don't know. It's
I don't think
being
so.
taught at schools, right? You know what? I think it's more curiosity. It's funny because I also look forward. I love technology.
Yeah.
You know, I ended up managing the Canadian pension plan for Microsoft Canada starting around 1995, where nobody. It's funny because when I had my review with the manager, with Richard, he goes, "Who's Microsoft?" Right at the time, nobody knew what Microsoft was going to become. I was looking for a way to as I was growing the group RSP business was changing, and so I went after Microsoft because we thought high tech, my partner and I at the time, we thought high tech was going to be a place to be. So I'm not open to, you know, I bought my first Bitcoin at $5 because I lost them because it was through Mt. Gox. It was a game at the time. But again, I had read the white paper and I realized, oh, this is a decentralized ledger. It should do to the banking system what email did to the post office.
Sure.
And today it's clear that blockchain is going to be part of the future. So what I'm looking at is more how are these puzzles resolving themselves and how are we rebuilding? And, you know, when it comes to rebuilding monetary systems and debt, gold is it. That's why gold is money. Everything else is credit.
Right.
Because the problem is credit. And silver comes behind it, the monetary metals. The monetary metals are the least misunderstood thing in the world today because I don't think people understand what money is. There's a big difference between currency, the ability to transact money, and money itself, the constant that we can all have as a peg for a set value globally. And that's what gold offers.
Now, I know that you're a silver bug, and you do like silver. Like silver is probably the preferred pony at this point, just because the price disparity to gold, and it's got
everything.
It offers more torque than gold does now. If that's fair to summarize it that way. One of the other interesting phenomena that's happened in the last decade, and this is new in the history books for silver, is its duplicate use case. And so now it's not just a financial metal. It's also part of the technological revolution. It's critical in doubling the efficiencies. And, you know, for you to fact check me, listeners, I'm not sure if it's a double or 80% or 50%, whatever. It's significantly improves.
It's important that the demand is growing exponentially.
Yeah, and solar panels work way better.
Correct. Right. Not just solar panels. You have it on your phone, right? It's micro. But the demand continues to grow. And if we're going into an electronic future, silver is going to be important. But as a monetary metal, it's also going to be important.
Can those things compete? Like, can because of its industry application, can it be stripped of its monetary metal accolade? I guess
it probably could.
Like, can it exist in both arenas?
I think it could. I think it could, and it depends on government policy. I think eventually the technological and the manufacturing needs of it are going to surpass. But it doesn't change the fact that, you know, if you look at, call it, the demand is 1 billion a billion ounces a year. We're only producing 750 million. So there's a massive deficit, and that deficit is growing.
Right.
And it's only going to get worse. So that's a positive for
both
silver.
cases end up making silver worth
But
more.
to some extent, that is because we haven't been, since the price hasn't risen, like copper, like lead, like everything else, it hasn't inflated. We really haven't been looking for many silver mines, right? If you look at the bigger problem is the fact that when it comes to silver, the bulk of the production is coming from copper, from zinc, from all kinds of mines, so it's a byproduct, right? Now, that's a benefit because if you understand, for me, the bottle's always half full, half empty. Right. It is a benefit if you understand, that a lot of these copper mines, to them, that little bit of silver, that 1-2% that's in silver, they don't care for it. But, I know a company that is actually grabbing that silver and building a pipeline, which is great.
Yeah, like a streaming company that's accumulating these.
But just silver itself,
right?
Versus your traditional royalty company, which I also like, but there are different models, right? So silver to me is an amazing asset. And it has the biggest upside because, now it's becoming a strategic asset. You know that the Russian central bank is going to start buying physical silver now for its vaults. So that's also bound to accelerate. Right. The other problem is the geography. Peru, Chile's a big silver producer only because they produce a lot of copper. The Saudi Arabia of copper, but Peru and Mexico are the leaders, right? But now we're trying to get into, Trump is trying to get into a tiff with Mexico. Well, just shut off the silver. It's a huge win for Mexico. So, anyways, everything has a tit for tat in terms of geopolitics and everything's interconnected. Something that people seem to dismiss, right? How the election in November, the same crowd that was telling us that everything was okay under Harris, Biden. Was still okay under Trump, where I completely disagree. He's completely upsetting the card.
It's turning out completely.
In a very interesting way. And, I've talked about that in a couple of podcasts where I think he's going back to the 1930s mercantilist system, which is funded through tariffs, which is why the tariffs are important. But also in the 1930s was when Roosevelt resets the debt. And that's the way that debt resolutions have always been done, by resetting debt to gold, money versus credit, which is exactly what Roosevelt did. And that's exactly what even, in the first podcast I did this year, I was saying how that $5 trillion bond idea is exactly what Roosevelt did, right? But we need to get gold to at least $19,000 or higher to equate to $5 trillion on 8,000 tons. Right. But how do we get there? And I think the signals that are coming out, which Bissent said, we're going to monetize the asset side of the ledger. Well, let me tell you something. The Treasury only has two things in the ledger: credit and gold. So if they're going to monetize, and they're talking about building this reserve pool of other metals. Well, that's an idea. What they really do have is the 8,000 tons. So I think that's why we're starting to see the stresses between the LBMA and the COMEX, is because I think they're starting to push the shorts out of the way, raise the price, because you can't go from $2,500 to $19,000. You got Jim Sinclair, actually, who I had followed over the years, had said that if when this occurs, and we're talking about a reset of the debt system, you can't go from the current price to where it needs to go, right? So you have to first raise the price over this year. Now, they did say 12 months, which is actually quite interesting, again, from a historical perspective. I'll come back to that. So I think what they've done is give themselves this year to get the price to a higher level so that then they can do the jump. Now, why is next year so important? Because 2026, if we're doing a 50-year bond maturing in 50 years, that's 2076, which is the 300th anniversary of the U.S. It'd be pretty cool to mature that bond and be debt-free and in a completely new model at that point.
Oh, interesting.
So that kind of, again, when you're looking at history and you're looking at patterns, you can also kind of look forward.
Well, here's one I want to drop on you, because I've been listening to this, and I love when you talk about this stuff, because again, most of it goes over my head. But I try as I understand it in the moment, and then if I try to recount it, somebody else would have a hard time. which I think is the majesty of listening and learning from somebody that knows a lot more than you. But as a historian on this, I can't help but think when I'm looking at what Trump's doing now with the tariffs and the pressure on his partners, right? And a lot of what we're seeing, part of me says he's obviously trying to fix the balance sheet in the United States with the cost-cutting Doge and on some of these things. And as you're saying, trying to restructure, reposition the U.S. dollar. Is it? A couple of questions, I guess. One, back in the 1930s, when did the United States dollar, and this is how naive I am, when did the United States dollar become de facto like a...
May 5th, 1933.
Okay. The global standard currency
up to May
of
5th,
the world.
So it happened in processes. Prior to May 5th, 1933, the pound was the king currency.
Okay.
May 5th, 1933, Roosevelt resets, bank holiday, 5 days, would take gold from $22 because they go from 7 to 22, say to Americans, sell us your gold, 30, then they moves it up to 35. Now you can own gold, but you are gold convertible to the new good as gold dollar, okay? What's interesting is that...
That internationally the dollar...
Not yet. That process has begun. That, what you're describing, is not set until after the Second World War, Bretton Woods,
1948 or 48.
1948,
yeah.
Right? But what's important about the 1933 period, we're going through the recession, the U.S. is in big trouble, everybody's full of debt globally. The parallels to today are very important because at that point, unlike the 1980s where we had a credit-based storm, but there was political cohesion. What happens in the 1930s is the governments break down. Mm-hmm. So that's what forces Roosevelt to kind of do this. And by moving that new goalpost of the reserves from 7 to 35, that is the pool of money, the new line of credit that actually builds the U.S. infrastructure. The New Deal was funded that way, the Hoover Dam, the roads, everything.
Wow.
Right?
Interesting.
Now, because the Second World War breaks out and the U.S. hasn't started until much later, I think 1943, in December, went Pearl Harbor.
Yeah.
Right? So, but that allows the U.S. to rebuild its infrastructure. I think the same thing is getting set up right now because they're going to have a $5 trillion of a brand new pool of purchasing power to rebuild the U.S., which is really what we need. To do MAGA, MAGA, to me, what's important to understand is the unwinding of the economic model of the last 40 years.
Right.
Which is to offshore the manufacturing capacity to the rest of the world and through debt pay for it and then buy it. Well, that can't work anymore. What Trump is saying, we got to rebuild, so we got to deal with the debt.
So when I look at that, though, when I think about that, and I guess the angle I'm coming at it from is that I'm looking at the behavior right now with the tariffs, and there's tariffs on, the Canada tariffs,
let me stop you there, because I think that, to a lot of extent, I think a lot of that is noise. I think some of it is
too.
I think the problem with Trump is that he says a lot of stuff.
For sure.
Right. So I'm more interested in what the players that are behind the scenes doing are actually preparing. That's why Scott Bessent to me is I had no idea who he was. Once I looked into him, he worked with George Soros, which to me, Soros, I can take him or leave him, but Jimmy Rogers worked with Soros in the Quantum Fund. Yeah. It was both of them. He trained with Rogers. Then he trained with Drunkenmiller, who thinks like me as well, right? So I look at process. That's why process,
Drunkenmiller's a hard asset guy too.
Oh, exactly.
Yeah.
But for the very same reason, as Bessent. Yeah. Because he said, I like gold because of the stresses between, the credit stresses between China and the U.S., right? So I think gold they understand that gold's smack in the middle because it's the only way to resolve the debt issue.
Well, and the other guy that Elon likes for Doge.
Ron Paul.
Ron Paul, yeah.
Of course. Not only is he a hard money advocate, a libertarian, but he was also head of the Hexel Committee that oversees the Fed and the Treasury.
But I guess the angle I'm looking at it from a geopolitical framework in a history repeating itself type of situation, drawing the parallel back to, as you said, 1933, is right now I look at Trump's position in the world stage in the West, right, as leader of the West, leader of the free world, we'll say, right, the Western nations, and I look at Europe and Canada and the UK, and so he's leader of this great allyship, this great partnership in the face of BRICS, which, you know, he's giving more color to BRICS. But the nations that he's partnered with
I
are
think
weak
the
nations.
U.S. is going to line up with the BRICS.
Oh, that's what you think is going to... I think
Because,
what's going on...
Hold on.
Yeah.
This is how I see this game, and actually this came to me when these ideas first started taking shape, was a couple of years ago, around 2016, from... there was a chap called David Istulin, who used to be a spy for the KGB, but an analyst for the KGB, ends up teaching at U of T, and he said some really interesting stuff that got me thinking. So he says, just because he's a billionaire, it doesn't mean that he's going to become president. Look at what happened to Bloomberg.
Sure.
So you have to understand what's the bloodline behind Trump, right? And he said the bloodline behind Trump is the bloodline that won the U.S. in 1776. And the bloodline against Trump is the bloodline that lost the U.S. in 1776 and wants it back. Now, that makes a lot of sense because if you look at Bannon, you look at a lot of the guys that Trump had in the first administration, they all went through West Point. West Point was set up by George Washington and is one of the few institutions that actually teaches the Constitution and hasn't diverted. Because to me, the U.S. Constitution is the most amazing social contract ever written.
It's amazing, yeah.
And that can be duplicated in today's world. And I'm very optimistic as to the world I see rising because of blockchain, because of how we can reshape the world. Let me go back to 1776 for a second.
Yeah.
Because it's important to understand that the world prior to 1776, what comes out of it, was completely different. If you and I were talking in the year 1770 and I was saying, you know what, the world's going to change, and you might have a vote, you would have said, what's the king going to say about that?
Right.
Because the social contract, exactly, the republics aren't born yet. So we were able, because of the same reasons of what's going on today, the kings at the time that were broke were the French, right? They were the U.S. at the time. The whole world is bankrupt. So through that bankruptcy, Isaac Newton and John Locke set up the gold standard. Mm-hmm. The gold standard funds the whole Industrial Revolution and the growth of Britain up to 1933 on sound money system, which generated very little inflation. But the whole social structure is rebuilt. Now, Britain holds on to its king, but think about the republics. They're all born, Chile, Argentina, the U.S. They're all born at the same time within a period of about 15 years. Yeah. Because everything's so broke that we have to rebuild. And I think that's exactly what we're doing today.
The revolution of revolutions.
The revolution of revolutions, correct. Yeah. But we rebuild the social contract. Now, the social contract today is going to be rebuilt differently because we have the internet, we have technology, the world's smaller. So I think we're going more to a more decentralized world. Everything's becoming decentralized. Look at the media. Right? The control of the media is completely being lost by the traditional media forms. Everybody's kind of seeking knowledge elsewhere, right? And I find that very liberating because it's up to the individual going forward. So I think the collective control is weaning, and I think that's where I see what Trump is doing also goes against that trend, because I think that if we're going back if what I think he's doing is going back to a gold standard, he's really aligning himself with China and Russia because they've been buying a lot of gold and they want to function in a gold system that, so let's talk about the BRICS for a second and what they're setting up.
Okay, we should, but, and I want to because it's important for the point I wanted to make too, which is I think my hypothesis with some of this behavior is that rather than necessarily trying to restructure the dollar and reintroduce gold behind it, I think also what he might be doing is tearing down the other currencies like Canada, the Canadian dollar, the euro, to get greater adoption behind the dollar.
I don't.
Is that possible?
No, I don't think so. I think Canada is is lost in that storm because we don't have any gold. We sold it. It was bad policy.
Of course.
So Australia has 80 tons of gold. I think we had. I can't remember how much we had, but we've sold it all. So I think that's inconsequential. I think what's important is more, I think the attitude of the Trump administration is more similar to the policies of the 30s, which was to retrench internally, to isolate, the isolationist movement that occurs, right? Where you can't have troops everywhere. It's kind of like the Roman Empire. You gotta trench back, rebuild internally. And I think that's the process that has begun. He fully understands that the most important thing is to rebuild the U.S. economy, rebuild the infrastructure, rebuild the industrial capacity, and how are you going to pay for it, right? So that's where that comes in. But you got to forget about the world hegemon. I think it's becoming clear that he understands that he has to share the power with these new powers, right?
Yeah.
And China, I think, is the key. And I'm I don't think China wants to take over the world, because I've seen how China has functioned within Chile through my career, having started going back to Chile first with BMO in the early '90s, and then along the way working with Latin America, ending with Scotia, where I was covering Chile for Scotia International, right? So China is not there. It's a completely different foreign policy than the U.S., which was, hey, we don't like your president, we're just going to kill him, have a coup d'etat. We're going to set up Pinochet there. He can do whatever he wants. Let's get the economy going so we can get what we want. The Chinese are different. They're saying, they went to Chile and they said, what do you guys need to get that copper out of the ground? What do you need for infrastructure, right? And you guys run your government. We'll help you get the resources out of the ground, the whatever funds you need to assist you with that. So it's a different kind of policy. It's more yin yang than imperialistic in nature, right? And that's why I'm more trustful of China. It's funny. A trade attaché that I met early on, he said to me, our biggest problem is to be understood. And that's when I started thinking about China, right? Because I asked him, because in Chile you never saw Chinese people, right? And he was there was a whole congregation at the hotel. I was curious. I started chatting when we became friends over the years. And he said that to me once, and that's when I started thinking about how they're approaching their growth within Latin America. And it's worked out great. They're not there changing governments. They're saying, okay, you run your things the way you want to do it, but make sure that copper as it's coming out of the ground, we can use it, right? Yeah.
A little bit of mutually beneficial collaboration, rather.
Correct.
Than,
correct.
Than
And so when I look at the world, I look at all of these changes that are occurring, and then it goes back to money management process, because that's what I do. I'm a portfolio manager. So what are the important things? I like copper, but I think the real opportunity going forward is what's happening in the monetary cycle, right? Because what people don't understand about what happens in 1933, it wasn't that the stock market, but yes, the stock market crashed in 1933, but it also crashed in its currency, because the U.S. creates a brand new currency. Now, that process is no different than what happened in Argentina and Chile, a lot of Latin American countries where, you had 1 peso one day and the next day you had a new peso with a lot more zeros, right? So you completely restructure the monetary system that way. But you could peg back to the U.S. dollar. The problem today is that it's the dollar, the currency reserve that is in transformation.
Right.
Right? And that's where that's the clink.
It's not a new one getting upgraded to then take over. It's currently the one.
It's the king now.
It's the king now, and it has to be remade.
Correct. So I think the bigger question is not about the currency reserve. What I ask is, what currency reserve? He wants to keep control of the U.S. dollar as a currency reserve, but is he talking about the fiat reserve or a gold-backed reserve from the fact that they still have 8,000 tons?
So there wouldn't be advantages. Like, again, I'm not an economist, I'm a geologist, but there wouldn't be advantages, hypothetically, to having Canada, Europe, the UK adopt the dollar as their currency to the dollar.
There might be.
To
there might be,
but value and
there might be, but I think that's a sub question that really has to come first with what is the U.S. going to do.
Right.
Right. I think that's more important because, again, so let's talk about Canada and this whole discussion of what he's saying about Canada coming over to the U.S.
Sure.
I have a lot of Canadian friends that are like, oh, no way, we're not going to buy Canadian, we're not going to buy Americans. That's fine and dandy.
Yeah.
But then I don't think they're doing a true assessment of the true situation in Canada. Because look at what's happening with the pension plans. They're all sitting in U.S.-based assets.
Yeah.
They don't have any
been
gold.
Sucked out of here for a long time.
Right, which it hasn't been a bad thing because, again, they're chasing returns. Those returns are there. But what happens if the currency by which those assets are invested in all of a sudden gets devalued against a brand new currency? They're in a big pickle because that $1,000 you were going to get from that pension plan all of a sudden lost all its purchasing power in the same way that the Russian republics did when the ruble fell apart, when everything fell apart, the same way that the Argentinian and Chilean pension plans were in the big pickle when the new peso got restructured. Now, for Latin America, it's fun and dandy because it can sit in U.S. dollars.
Sure.
Canada sits in U.S. dollars. Everybody's sitting in U.S. dollars. But nobody's thinking about, well, what happens if the U.S. dollar is devalued? Which is why I'm investing in the way I am, because I think that is the bigger risk. That is the bigger, actually, to me, it's half full, half empty.
Sure.
That is the massive
Well,
opportunity.
yeah, because you're looking at it as what happens if they don't course correct to save the dollar, and for you anchoring it back into a hard asset like gold is
no,
part of the solution.
hold on a
which is
second.
good.
It's not to save the dollar.
Okay.
It's to save the U.S. It's to rebuild the U.S. In order to rebuild the U.S., you can't continue on with the fiat currency with trillions of dollars in debt.
Sure.
Right? And here's the thing. Governments never default. They devalue. And they devalue through gold.
Right.
And that's where gold comes in. And that's why it's so important. What they're already signaling that they're going to do it within 12 months.
So let's talk about BRICS because you brought it up, and some people may want to learn more. You know this topic better than almost anybody. So what is BRICS?
Well, BRICS is Brazil, Russia, India, China, and South Africa. South Africa, one of the biggest miners in the world. So actually, if you look at it from
BRICS. Sorry, I said Brexit. but yeah, BRICS.
BRICS.
Sorry.
BRICS. So it's the most populous bloc in the global system, but they've been developing their own economic ties. Now, what's important about it, what I find amazing about BRICS is this thing called mBridge that was set up by the Bank of International Settlements as a trading platform for them from a monetary perspective, right? Because what it was the alternative to SWIFT. To some extent, the Americans themselves shot themselves in the foot when they put the sanctions on Russia, because Russia is a big energy producer and India still needs to buy energy, right? It supersedes everything.
Allegedly, Germany too.
And exactly, we all do. Right. Canada does, right? Yeah. Now, so because they couldn't function within the SWIFT system, which is the centralized banking system, which functions in U.S. dollars, so you got to convert to dollars to send money over to Russia, and then convert back to rubles, right? That's the glue. So mBridge was set up, and that's a decentralized, blockchain-based trading platform, but it still needs a peg, and that peg is gold. But it allows for these countries to have control of their currencies internally, but still trade among themselves with gold as the peg within the blockchain-based mechanism. Now, what's interesting is that I was on a Twitter debate that was going on about mBridge, and somebody said, "Oh, the U.S. should just disregard that." And I said, "Why would they? That is a beautiful tool with anybody with 8,000 tons of gold to completely unpeg and reset themselves, right? And it would require a lot less bankers, which I think is a positive." Now, I dropped it at that, but then I took that alone and I posted it on Grok. And AI came back with a beautiful answer. It said, "You're right. This is a decentralized bank, a decentralized tool, which would allow anybody that's going back to a gold-backed system or sound money system to function properly and trade." So what's amazing is the tool's already there, right? To decentralize now the banking system, which is what's actually happening. Because don't forget that outside of a fiat system, which is what Nixon puts us in, you don't really need central banks. In a sound money system, you only need the Treasury, right?
Yeah, fair enough. Yeah.
So central bankers are there to adjust to do their
Stimulate,
little
print, do this,
their
do
little
that, yeah.
alchemy to keep things going. But the problem is, by default, is that is based on debt, and it requires more and more debt and more and more debt and more and more debt, and sooner or later,
the card castle crumbles down.
Exactly.
Yeah.
Right, and that's a problem today. That interest rate expense at the current rate of interest is already overwhelming tax revenue in the U.S. So we have a problem, right? The ship is on the water already. So the only way forward is either default or reset. And I think reset is what they're going to do.
And I guess I could see where that's going, where you think that there is even a possibility that the U.S. could join BRICS.
Well, exactly, because first of all, I think what's going to happen is the U.S. is going to isolate itself, retrench itself. But when you start thinking about that setup next, because I don't think Russia wants to take over China and China wants to take over Russia. Sure. They're just working together. And I like the setup because it's also solving a lot of I've always been fascinated by that whole area that the British call the Great Game, the control of Eurasia.
Yep.
Because that's global trade between Europe, Asia, and the right to control of that. So I'm fascinated by what's happening between, for example, Iran and Saudi Arabia. Because of China, they're finding peace. They're communicating, right? What's happening between Turkey, the Ottoman Empire, exactly.
Yeah.
Turkey back to being the banking center that it was when Marco Polo.
And it's flirting with this BRICS thing too,
and it's flirting
with. It's been included, but they haven't. They're in, but they're not in. They're in. They're on the. They're on
correct,
deck.
right? And then this whole argument about Taiwan. Well, I think people better understand that China is a 5,000-year-old country. Right. Taiwan was part of it, and it was lost through the opium wars, which was all about silver and drugs in the 1880s, right? And Hong Kong was part of that. So it's just a repeat of that period, right? And so I think Taiwan will become part of China because I think we underplay China's ability on the technology side, and I personally think that they've superseded us already. Right. And so because of that, the only importance of Taiwan strategically is the fact that 80% of all the chips are coming out of there. But the chips that China are producing are way better anyways. So I think eventually they're not going to catch up, and Taiwan is going to say, you know what, we'll join China.
I mean, it's so crazy to me when you think dogmatically about the preconceptions of China and Chinese innovation or capacity thereof. It's like, you'll hear people say, well, they just copy everything and they never invent anything. Stuff like
We've copied everything forever.
Yeah, right. It's like
nothing is new. Everything is a copy and a reinvention of something.
Some of their electric cars are crazy. Like they got robots. Like Elon Musk rolled out his robot, right? Which is like the which I think is super cool. The Optimus Prime. But then all of a sudden you look and there's already robots that are doing jobs in China. And
totally. But look at what they did with high-speed rail. They built 25,000 kilometers. California couldn't do 1 kilometer, 1 mile, right? And they wasted how much money, right? So again, it also shows that there's nothing wrong with debt as long as it's productively spent, not on wars. And why wars? Because of oil, right? So to me, the last couple of years has been the last bout of the petrodollar as the final leg of the Anglo-American empire, which is what we're now seeing unwinding. But I think the U.S. is going to come out, and I'm not talking about the American empire. I'm talking about the U.S. itself, the U.S. Constitution, America, the one I like, the John Wayne, the Hopper, the Mark Twain, right? That America, the America that I love reading, the Michener, right?
Yep.
And that's why I believe in the U.S. I'm a massive optimist in terms of what I see coming out of that, and the Constitution, right? It's funny. I always say to people, if you want to understand the U.S., read Michener's Texas. It's the history of Texas. I always thought that the Americans had taken Texas from the Mexicans, and they could never control it because they couldn't control the Apache and the Comanche. Yep. It wasn't until the new settlers started to come in that they had nothing to lose, so they fought them, and it's a sad story, but what comes out of that is really what I think gives Americans their gumption, which is, the church, the family, the gun, and the community.
I think it's amazing because you look at like some of the fractures within the Charter of Rights and Freedoms in Canada, as we like to compare ourselves. Well, we've got a constitution too, and it's like if you look at it,
we don't have a constitution because we have a monarchy. We still have the king as.
It's a different setup, but like we look at our Charter of Rights and Freedoms, for instance, and like there's people that didn't even sign on for this thing. Like there's like some provinces that sat it out. There's like the First Nations never got properly dealt with in that situation, and so there's like real fundamental cracks in Canada's architecture that. From a constitutional level, at least if you go back out to that level of it, that I think are
you know what? Yeah.
How do we solve that?
Time, because I think Canada's a very young nation. I think that's a problem. That Canada as a nation, we're still building our history, right? So I appreciate a lot about Canada. I'm an immigrant to Canada.
Sure.
I came from Chile. I came here when I was 11. I love the fact that Canada is such a multicultural melting pot, which actually shows that the world can function as one. That's what I like about Canada. I also like the outdoors. I love winter. I love the size of this country, the beauty of this country. I appreciate Canada more than a lot of people. And you know what? I still have dual citizenship, but this is where my fight is. Right? It's in this country, and my job is about trying to help Canadians through the next period of what's happening economically to us, because it's very similar to what I lived through in Chile. And it's funny because Pinochet dealt with that very well. It's funny, my father was a communist, why we ended up in Canada, because my mom was the daughter of an industrialist in Chile, and she said, okay, we're not going to the Soviet Union or Cuba. So it was Canada or Australia. So we ended up in Canada. Right? But on my last trip back from when I was working for Scotiabank, I knew I was going to quit. I took my dad out for supper, and I said to him, Dad, I think history is going to remember Pinochet as the most Chilean of all Chileans. He goes, what the hell are you talking about now? We had one of those relationships. He being a communist, and for him, Pinochet was
the enemy.
And I said to him, well, if you really look at it, he was the worst badass dictator of Latin America. So he was the best dictator ever. But what he did for the economy was great, right? Because he cleans up the debt. He resets the whole clock. How he does it is very Milton Friedman. He gets a Chicago boy. And that's what really is driving the economy of Chile today. The fact 2,500, it's close to 3,000 per capita debt, right? And the debt can't be increased. And then I said to him, and by the way, so what's the motto of Chile anyways? So the motto of Canada is that mare buscar mare, from sea to sea. In Chile, it's by reason or force. Por la razón o la fuerza. So by force, he achieved what couldn't be done by reason, right? Which was to clean up the economy and get the economy going, which was set it in its root. And then he goes, oh, I'm going to have to think about that, right? But again, I don't think Pinochet was a good person, but what he did for Chile was great. But I think the economic collapse that takes place is what's important, because I think the economic collapse that happens because of all the credit that had been issued is actually what's going on globally. And there I see, again, the bottle's half full or half empty. How do you position yourself to benefit or to protect yourself from what's about to happen? Because then it goes back to my days at Gordon Capital. Monty Gordon he would always say to me, just remember, money is a blob on a platter. That blob grows, and it's grown a lot because of credit, but it's always moving. So get yourself to wherever it's moving. And that's why I like gold, that's why I like silver, because that's where it has to move to, because we are going out of a credit-based system to a sound money system, because this is about money. How do we clean up the debts of the past?
So with our audience, a lot of them, be it retail investors, I'm sure some are quite wealthy and some are not. Probably the vast majority are not. How would you go about, Jaime, you've been managing money and managing wealth for quite some time, and you're one of the best at it. So how would you go about doing it?
Well, first of all, I gotta say,
positioning yourself
I
for
gotta say
this.
that I'm always on your site because I'm looking at all the companies you interview.
Yeah.
I'm always looking at what's going on within the mining sites, and it's great because there's 1,000 ideas. But how do you take all those things and start to build a portfolio, right?
Right.
Or to start to advise. The first thing I would say to anybody out there, any Canadian, all your savings that you're putting away at the bank in fiat, buy a little bit of silver. Buy some silver and put it away at home.
So are you talking about physical silver?
Physical silver, physical
Okay.
coins.
Okay.
Right? There's a lot of gold bullion dealers I like to buy from First Majestic because I own the shares. So I'm buying
Yep.
from myself. I also buy from Toronto Gold Bullion. I buy from Sprott. I'm always shopping around because I like having them. Right? So start by saving out of fiat. Save some money in physical coins. It's funny.
So let's say I've got, my salary comes in, I've got my mortgage payment, kids, whatever, all this stuff, and I'm left over at the end of the month. I've got $1,000. What am I doing? Am I buying $100 worth of silver?
I would buy $100 and park the rest in your TFSA until you get to the top.
Got it. Okay.
Right? And then, again, I see physical no different than cash. Okay? So it's my cash savings.
Yep.
Then comes the speculation. The speculation is your investments. That's where things get a little bit tricky because I isolate between 4 categories: exploration, developers, producers, and royalty companies.
Okay.
So they're different animals, all 4. So how do you take all 4 and set them up, right, within a portfolio?
Should you have all 4 in your portfolio?
I think you should.
Okay.
I think you should. Well, the fun part is the speculation of exploration.
Sure.
Because actually that, to some extent, has really kept the portfolio going because, we've done extremely well in stock selection there. I have four things that I look at when looking at companies, and I think that's pretty constant among all of them. First of all, management. Who's managing the pool? Next, with a producer or what they're exploring for, the resource and potential resource on the ground. Right, with the big producers, they have a lot of resources already found on the ground. Next would be cost of production from that geology, right? And fourth, and more importantly, geopolitical risk, because that I think is one that people tend to dismiss a little bit too much, and also have a little bit of lack of understanding, right? And so I always look at all 4. It's very hard for me to, for example, invest in Africa because I don't know much about African politics.
Sure.
I've been buying silver company in. I actually started looking at Africa.
Well, I think that's an important distinction you just made. You don't tend to buy Africa because you don't understand African politics. But it doesn't necessarily mean that investing in Africa is bad. It's just not something that you don't feel confident enough to understand. Okay.
Right, and what am I looking into politics? Well, how many times has the government changed? What are the mining rules?
Right.
What is the basis of the law? Is it British common law? Is it French? Is it Dutch? Right, all things that you need to know because it'll affect the mining jurisdictions. Right, like so Central Africa. I've been studying it more because Fortuna bought into that gold mine.
Yep.
Right, so that was my first. They did it for me. So I got involved, but then I also started looking at Morocco. I find Morocco very interesting.
Morocco is super interesting.
Yes, and with some really good silver assets there.
And Benoit LaSalle has been killing it over there.
Yes, he has. But again, so the geopolitics important. I like the other thing is where will these things trade? So I love Adriatic metals,
Yep.
but they only trade in London. I wish they were trading in Toronto. Right, it's very hard to trade things in London. Okay. But again, those are more technical. But again. Those are important things. So on exploration, I got to say, I love participating in it, but you can't just choose one. You got to choose 5. So you got to allocate your money and say, okay, if I have $25,000 to invest in exploration this year, make sure you allocate 5, 5, 5, 5. So break it up. And again, choose.
And you know full well some of them will go completely belly up.
Correct.
You're taking a stab at something going from 5 cents hypothetically to $5. Like
well, I can tell you that some of them
returns.
have gone from 15 cents to $12.
Yeah.
80-cent flow through to $8. 10-cent pre-IPO to now $3.
Sure.
So they're there. But then you're going to have two that never went anywhere.
Yeah, if you buy
right?
20 of them, that can happen to 2 or 3 of them, or
Exactly.
5 of them. And,
yeah,
exactly.
Yeah. I've been lucky in that out of the 5 to 6 that I choose every year, one has been one of the top performer over the last actually 4 years running. The second one has been pretty good, and the last 3, we've used them as a capital loss, and then you roll it over and start again. The developers right now. Developers are mines, so the Lassonde curve. You have a big discovery, now you got to develop a mine, right? Some of those, there's some really good picks right now because the value of the reserves on the ground is ridiculous, right?
Yeah.
And so there, it's a good place to be. And what I like to look at is, well, where were some of these in 2020, 2021, especially the ones that have continued to develop their mine forward. Here we are now, 2025. And, you have some that were $4 in 2021, and they're still trading at around 40 cents.
Right.
Well, they're making it through, and then you got to do your homework again in terms of, if they have debt, who has that debt, what's their approach to that debt, how are they managing that. But again, I do have, I would say, within the portfolio, 10% in developers.
Okay, 10% allocation to developers. So for the listener, sorry, I just want to clarify a couple of terms. So you mentioned that there's a lot of...
Oh, hold on, let me back up. Exploration, I keep completely separate.
Yeah, that's separate.
But then I have the portfolio itself.
Okay.
Right?
And then you've got 10% of the port into the developers. And what you're mentioning is developers are interesting now because... the value on the resources in the ground is ridiculous, and I think what you meant by that is it's very undervalued. Like
correct.
There's companies out there. Discovery Silver was a good example with a lot of metal in the ground, a lot of ounces of silver, and the discount. It was if you looked at the market cap versus silver in the ground, unmined,
and you do the math.
And
I think that was below $1.
Exactly. Now I was buying it at 50 or 60 cents.
Yes.
My
Yeah.
And now
it's
what,
and that's what I look at is, okay, what am I paying for the ounces on the ground? Because I can trust the management to get it out at some point. And also the fact that, go back to 2011.
Right.
In 2011, Trelawney, which was a company that we funded from beginning to end, I think it got taken out at about $400 an ounce gold on the ground.
Yep.
Because it sold for $400 million, right? And they had 1 million ounces.
Yep.
Now, that mine's up and running. Côte de Lick, right, that's right. Yeah. It's up and running. But it got up to $400. I've been buying gold. So people are running around looking at 2,900, 4,000 Canadian,
right?
Which actually is something we should talk about because that's a clear example of how the purchasing power of the Canadian dollar is going down.
Which is crazy.
A couple of years ago, we were at par, and now we have gold in U.S. dollars, 2,900, but Canadian 41.
Oh, Jesus. Yeah.
Right? So there's a wake-up point for people. But go back to 2011, okay, right, when we were at par. So gold on the ground got to 400. Now I'm picking some up at $90, 90 or else, right? Which is, I think it's crazy. I'm looking at Agnico Eagle, which I always talk about because it's been my top pick. I started buying it back in 2006. I started building my position. Yeah. And I think I own more shares than any Canadian pension plan now.
They're kicking like a 3% dividend too.
A 3% dividend, yeah, correct. And they produce at what, $900, 1,000, yeah, something like that. And here we are sitting at 4,000. It's a money machine. But those reserves on the ground, we're still buying it relatively cheap, but we're getting paid to wait, right? And then you start walking yourself down the list of the producers, right? Okay. Then we look at silver within the production spectrum.
So when you look at, just to dive into the spectrum of producers. Again, are you going to take a scatter shot, or are you going to go with there's some real clear winners here? Like Agnico's a clear winner. Is it just better to just buy the winner, or should you buy a little Kinross too and a little?
No, I don't like the big boys. I don't like the
Eldorado and stuff like that. Like, should you splash it around a bit?
I do splash it around, but what I'm looking at, so Lundin Gold was a great example of Fantastic. What I was looking at, right?
Yeah,
but how did I come at that one? Was a little bit different because I had participated in Aurelian back when it was the Fruta del Norte de Buster, which I like.
Incredible.
Ken Ross, the reason why I don't like Ken Ross came in and paid $1 billion, I think it was, for that in 2012.
Yep. Lost it to the China,
Right.
Lost it to the government.
So that was great. I'm out. And then the Lundin family comes in, and that's, I'm in. I'm back in. And I've held it since because that's an amazing deposit.
Yep.
And as a result of that, I ended up with some of the filo, which worked out well, which is another area on the exploration side, Latin America, Chile.
Yeah, the Vicuña district.
Oh,
is
there's
fantastic.
a couple of.
Yeah. Well, they're all winners in there. There was
Atex?
Filo, yeah.
Mogotes.
We did
yeah.
Mogotes in there.
Yeah.
Which I don't know if it's won yet or
But
not.
again, those are exploration, so they go back to the
stage.
exploration.
But the district in
Correct.
general was the investment for us, yeah. Interesting. So, yeah, very cool.
So I do look at that, and I have, I would say about 50-50 between gold producers. And the reason why I don't hold on to Agnico is because, go back to portfolio management process. So I have Agnico within the portfolio, but I set it at my maximum hold. So call it 7%. If it goes to 10%, I just trim back, and I immediately use it to buy the ones that haven't moved. Right?
Okay.
So by default, over the last 3 years, what's been great, Agnico's been moving, and I still have my Agnico position, but because of the process of both taking profits from the exploration and from the ones that are doing well, I've averaged down on some of my silver companies that I love.
Okay, so you could take a little trim off of the outperformance of Agnico. Let's say it goes up 30%. You don't need it there as to rebalance
That's
the portfolio.
right.
So you rebalance it back to where it was, and then you take that
and immediately add to the ones that I've set at 7%, but now it's 5 or 3%.
Got it.
And by default, what's happened is that I've taken my average cost from those companies that were at $4 in 2021 that everybody's left because they're not investing. Well, now I'm below $1. Yeah. So I'm starting to be in the money on a number of those that have started to move up now.
Interesting.
Right? But again, that process of rebalancing the outperformance is actually 80% of a portfolio's or long-term return because you're taking away the fear and greed factor. I'm not falling in love with anything. I just like the fundamentals of all these companies. Unless something fundamentally changes, I won't pop it out of the portfolio if something really good comes along that I need to get rid of it.
With the exception of the juniors. That's just that's a whole different basket.
Well, you know what?
You're not going to be rebalancing into those.
Well, no, it depends. Not really. Not really, because when you look at the silvers, they all became juniors.
Right.
Right. Yeah. So, and there was some really good picks to be had within those. And now I like silver better because, again, I started playing into the sector in the early 2000s, actually even longer than that, but not to as disciplined as I've been since the mid 2000s, anticipating 08, 09. Right. But in the run up from 2009 to 2011 was unbelievable because the index itself returned 100,000 turns to about 350,000. Uh-huh. But by actually stock selection and having 50% in silver, 50% in gold, that 100,000 turned into $1 million, right? Because of that. Now, this time around, we've had even more time because don't forget that move of gold in the year 2007, 2008, we break through 1,000, just go up a bit, then we crash down to, I think it was 600 before we start the big run up to 2,000, right? That period was only a year. We've been in 3 years of this whole consolidation period, right? And that was it required more patience. Everybody left, which meant that the companies got even cheaper. But those with a process, we were adding. And so now we're even stronger coming out of it in that we have some amazing positions in companies with leverage. And that's what I'm looking into the producers. You have your 4 quadrants, but then what is financial leverage of these companies to the move up in the price of gold or silver? Now, silver. Let's talk about silver for a second. Because silver at $30 or $40 or $50, it's ridiculous from a historical perspective. Because historically, 1 ounce of silver has always bought between 16 to 30 ounces of silver.
1 ounce of gold, yeah.
But sorry, 1 ounce of gold back to the Romans. Because that's a geological number of what comes out of the ground.
Yeah, it's a crustal abundance.
Correct. It has nothing to do with human manipulation of the paper price.
Yeah.
It has to do with how much we can dig out of the ground.
Right.
So the issue today is that the gold-silver ratio is back up to 96, right? But it's above 90, I think.
Yeah, gold's doing this and silver's still
Correct. Now that to me is a massive opportunity because it has allowed me to build into those silver producers that have the leverage to a move from 30 to, let's do the 30, at least 30 to 1. We're looking at about $80 to $90 silver. Right, so on that move, those companies are going to deliver an amazing cash flow, which we're already starting to see, right? And that's what I want to participate in because I think that's a massive opportunity. So my take, and everybody says, "Well, you're going to pool money." Well, maybe not. So what's the strategy going forward? First of all, I'm going to hold my positions until we get to some more realistic gold-silver ratios. That's the first thing. Okay. The other thing to understand is that, go back to 1933, and this is important. How am I looking at the portfolio from a long-term perspective? Because I think what we're going to go through now is different over the last 40 years. But it's similar to what happened in 33 and what happened prior to that in 1917 and prior to that in 1776 and sometime around in the 1880s. In that, the price of gold is going to reach a level from which it will never come back because we're resetting the system. And in that environment, what's going to happen is Rick Rule and Egon von Greyerz pointed out this from two sides of the equation. And I was more focusing on Rick Rule, where he was talking about the 70s, how he had invested in a company that he started at $1, went down to 10 cents, only to sell it at $10. So we're looking just at the equity side of the equation. Egon von Greyerz said, you know, I had $1 invested in the sector in the 70s, but by the end of the cycle, I was getting that $1 in dividend. Yep. And that's important because that's exactly what happens in 1933. In 1933, if you start in 1929, you had $7,000 in the Dow, $7,000 in gold, and $7,000 in Alaska Junior homestake mining. The $7,000 in the Dow by the setting of Bretton Woods was worth about $3,500. The $7,000 in gold was worth $35,000 in then dollars. The $7,000 in homestake in Alaska Juno was worth $90,000 and paid you 10% dividend until Bretton Woods. So you were getting $9,000 in income every year because the reset allowed for these companies to rebuild a monetary system, and that cash flow was real money coming at you. So if we're going through that setup, my plan is not to take profits, is to allow the dividends that are already building within the companies, because Lundin Gold now has a dividend. A lot of the companies are First Majestic has a dividend. They didn't have one 5 years ago. Agnico has a dividend. All these companies are starting to declare, and they're going to declare dividends. So to take that cash flow to go and spend it in dividend-paying companies, or to trim back. So I have a client that said, you know, we were reviewing as I'm doing this transfer from one firm to the other, and he said, so what are we going to do? What's the plan now? I said, well, we have you at about 20 to 25. We'll just keep trimming back, and instead of buying silver companies like we were doing in the portfolio, within the income portfolio, we're going to buy those dividend income and continue to build the cash flow, right? But we're going to hold on to the producers anyways because we want to see the growth. But by being hedged, right, we're able to buy greater and greater dividend income within the portfolio. Now, I manage two portfolios. One is strictly precious metals, 80% precious metals. I'm not participating in copper in the base metals. I do have a position in BHP in the other portfolio because of the dividend. But right now, I think the opportunity is in the monetary metals. And 20% I allow for high tech. So there I'm participating in a little bit of AI, blockchain, and some other things, right? But that portfolio is a standalone solution for the person that has, you know, a lot of money at RBC Dominion, but they don't want to look at gold, they don't get it. But then they figure out, well, I got to have at least a 5% position, right?
So I'll buy that.
So just come in and we'll get you invested very quickly in some good quality producers. The other is for where I manage all the money for somebody. Right there, it's a dividend income, what I call the dividend income portfolio, which has dividend-producing companies globally. You know, you have the Brookfield that just raised its dividend. Some of the companies have been raising the dividend because of inflation. right? But also that 30% in precious metals. Now, why is that important? Because it's funny because this particular client kind of that I was chatting with, he said, now that I have the positions built, I'm talking to my buddies that have zero. I'm already there, right? But here's a $5 million account with a 25% position in good quality producers whose dividends are growing. So if you think about it, so call it 20%, you're looking at $1 million in the sector. Most people with $5 million dealing with RBC Dominion have nothing.
Yep.
Think about how hard it's going to be when the money starts re-entering the producers, or even gold now at $4,000 an ounce, to get themselves to a 20% position, right? So that's the hard part. It's getting yourself there, and that's where the solutions within the practice that we have come in terms of how to get somebody properly positioned as soon as possible.
I think a lot of people. And I wish I would have taken this type of advice or met you and learned from you in this way earlier in my life. But I think a lot of young people want that instant gratification. They want to buy that 1 penny stock that turns into $20. They want to take that 1,000 or 20,000 or 5,000 or 10,000 they have in their TFSA, and they want it to turn it into 100,000 so fast, so that they can have some real money to buy some real things to, get some dividends going that matter, et cetera, et cetera. But I think you could employ the same strategy.
Yeah, but that's
a smaller amount of money, and it's probably the safer way to go.
It is. But the problem is patience.
Right.
And by the way, let me back up a bit.
I should say.
No, patience.
Okay.
Patience. The patience to buy a company cheap enough
and hold on
to it and keep adding and build it, right? And that's something actually I learned from two guys. Arthur Labatt, not Arthur, sorry, from Trimark. Was it Arthur Labatt? Mr. Labatt, because I got to know him he was at the Cambridge Club. And yes, I know. And I think that's Arthur Labatt.
Yeah.
Anyways, it doesn't matter. But he said, when they first got the portfolio going, where the stock market hadn't yet taken off, those 5 years of just building and building was the toughest, but also the best, because that set the foundation for things. Now, let me back up a bit, because I want to make sure that people understand that I didn't get the portfolio, the conservative portfolio, up to 30% in precious metals just like that. What happened was that in 2019, that portfolio was built in 2015 when I was working at Scotiabank, okay, because I needed a solution for Latin Americans. Now, at that point, though, in 2015, we had just hit bottom. That was at 10%. And I've been building the asset allocation in the portfolio over time, the weighting, as I see that bubble, all of this stuff, all of this messes, I've adapted it or increased it in relation to the credit reality that I see happening. Right? Now, here's the problem, that people with nothing in it are going to have a very hard time getting themselves their life jackets on, because they have to understand that...
Is it too late for people to get their life jacket on?
No, because it's so cheap. The sector's crazy.
Yeah.
No.
Sure. So if you're listening, you can...
Gold is at 4,000 Canadian, but the companies are trading like gold's at $900. It's nuts. Like Nico just broke through to all-time highs, but how many haven't? Right? In the silver sector, you have companies that were at $4, and they're still trading below $1. Right? So it's a massive opportunity still to the person that figures out... stops listening to your... One of the other problems that I see is that the traditional advisory business today is about parking assets. It's not about thinking. Right? And again, that's a historical parallel that you can go back to the Nifty 50 period. Coming into the 1970s, you could throw a dart at the stock market and you were making money. So that 60-40 asset allocation model worked because things were just moving. But then inflation hits. And so it's funny, because when I started in the business, I started at Merrill Lynch, and I was taken to the Merrill Lynch How to Pick Stocks course, because they were coming out of that whole inflationary period where you had to change your approach. You couldn't just throw a dart, because not everything was working, and even within sectors that were working, not every company was working, so you had to go back to stock picking, to individually selecting stocks, right? And so one of the problems that we have is that the bulk of the street has been taught not to think, just park the assets, and pitch your clients on a lawyer for the estate planning, some insurance here and there, instead of worrying about the money management component, right? Just park that. But within that pool, what's in it? I don't care. It's parked. It's done well. We're going to follow the returns. But with inflation kicking in, all that's going to stop working, right? So you have to adapt the money management process back to stock picking. So that is one of the problems that I see, that I was lucky enough to have started early enough to have been taught how to stock pick for the very same economic environment that we're already in, that we're getting even more into.
Now, if somebody came to you, Jaime, and said, "Hey, like I've got a bunch of money," and and then you start to explain to them how they should be positioning it and your read on markets, do you find oftentimes people seek you out because of your read on markets and your position?
That's why I like every time I do expertise? A podcast, people are reaching in.
Okay, got it.
Always.
But they're not coming to you and saying, "Hey, Jaime, like I heard you're great. Don't know what you do. Like, here's my money, manage it."
No, because I'm not like the problem with that is that the I'm not your average advisor. I'm very focused, very set on a road that only 1% are following right now.
Right.
So what I find is that my clients have either lived or get what I'm dealing with, because they've either come from countries where that was happening. Right, or if they've experienced it, or they remember it. Like I have a lot of older Canadian clients that actually were building their businesses through the 70s and 80s. So when I started talking about inflation and higher interest rates, they got it, because that's when they were building their businesses, right? Young people today, that's been easy. Everybody that's inherited money over the last couple of years, well, shit, it was given to me. Right? It's a different animal. And I think that's where...
Have you seen a surge of interest, though? Like, have you seen...
Oh, yeah. No. People... Actually, it's funny because I see it on my Twitter feed, where people are wondering, well, what's going on with gold? Why is gold rising? I thought it was a pet rock. I thought it was a barbarous relic. But, hey, it's part of the system.
Right.
The Chinese like it. Central banks keep buying it. At least that question, for some people, they're like, wait a minute. Why are central banks buying it if, but they're telling me it's a pet rock? So that's a kind of inconsistent. It's funny because after COVID, everybody woke up and they've started asking questions, which is what wasn't happening prior to that.
Agree.
Right?
It was like
it's like awakening. Correct.
Yeah, totally.
Correct. Right. But that awakening is with regards to everything. And I think at the core of it is money. Right, where money is the one thing that people should be asking the most about, but they're the least asking about. And it's starting, though.
Yeah,
it's beginning. Because the markets haven't crashed yet.
Well, like the crypto space, again, blockchain, crypto, I'm not going to disparage this space. I've done enough of that to a degree on some of the shitcoins and the grifts in it. There's a hawk tua, and there's a this, and there's a fart coin, and a cum coin, and a this coin, and a that coin all the time, right? And so there's no doubt, but it's just like junior mining. Like at its peak, it was full, or .com. You had like all these shitty .com things too. So no matter what it is,
but the technology's here. The technology it's real, has a purpose.
Totally.
It's a good tool, and I invest in the technology because of that. Because to me, that technology is liberating. Because that technology is the new banks.
Right.
The problem is money. It's the restructuring of the money system. How do we get out of a fiat system?
But I guess my problem is that everyone that I talk to that's younger, like a lot of my friends and stuff, they're chasing whatever the meme stock is, the meme coin is of the day, the AMCs, the GameStops. Like, it's unbelievable. And these are just like personal friends, and they don't respect my game at all in this, so we're just friends. I mean,
I'll tell you what.
But I come into that chat and I'll be like, "Oh, gold's," and they're like, "Oh yeah, here we go again." They're like, "Good luck with your pet rock," and waiting for that. Like, meanwhile, they're short SPY and they're buying longs on this.
No, that'll change when we start to see some of these coins that are going to be gold backed start to come out.
Cool.
Yeah, because again, what people dismiss
is
that.
Any? Like, is there any that are?
I've seen a lot of like ABACs. I love what they're doing with blockchain on the trading platforms.
Okay.
I love. There's been a lot of things that are being positioned, and since I understand it and people know they're calling me, and I'm always being approached by technology guys in terms of what they're doing, and some ideas are starting to take good flight, right? But again, what's important to understand about that is that what Bitcoin and blockchain is replacing is Gutenberg. Think about this. Gutenberg invented the printing press. So that allowed for somebody to travel from Venice to Rome with a piece of paper saying, hey, I have this money in the bank. So that's your currency, right? That didn't change until blockchain came around because that's what banks are. That's a centralized ledger.
Yeah.
Right?
Like filing cabinets.
And the filing cabinets, correct. Yeah. That guaranteed that your money's your money so you can pay your bills. Now we have a technology that does that. So that's why, to me, it's so liberating. But you have to understand that at the core, that is the new currency, not the money. The problem is the corruption of money that needs to be reset.
Right.
And that's why gold comes in. That's why gold is so important. Because I think that when this is all said and done, and we finally, so let's think about this. When the U.S. says that they want to set up a $5 trillion pool, that's just a line of credit to rebuild the U.S. We haven't dealt with all of the imbalances and all the BS that's out there from a money perspective. We're talking trillions and trillions and trillions of dollars. So what is the true intrinsic value of real money versus this trillions of credit? First of all, we don't understand what a trillion is.
Yeah.
Right? So
you can't even envision a trillion.
Exactly. So it's the true value of the intrinsic value of real money. $20,000 gold, $25,000 gold.
Sure.
It could be, right? I think that when it's all said and done, people are going to be surprised by not how high gold went, but how high gold went because of the credit bubble that they built, which is more important.
I think there's going to be a recognition with how also a change of focus on not just how high gold goes, but they're going to look at it differently. They're going to say how low gold was for so long and why, like how they were so
because
baffled.
of the paper credit that was used to. So because
they just don't understand the monetary system. I don't understand it.
Well, it's simple. They've been selling forward future production that keeps adding and adding and adding and adding.
Yeah, for sure.
Right. So that's how they've been manipulating, obfuscating the price through the paper market. Right. So reducing its intrinsic value, and it's a lot easier to smack around the little baby brother called silver, which is why I'm more fascinated by that one because it has to inflate.
Well, it's part of this too is like with the Great Awakening is you're seeing stuff, and I think it's encouraging as well. Is like in the United States, you know, with obviously this Trump election had a lot to do with people getting awake to the wastage and the understanding that, hey, listen, our nation is in crazy amount of debt, and that's a scary thing, and that's our money. That's your money. That's my money. That's the taxpayer. The taxpayers are paying the bill. The consumers, like it affects everybody, and so reestablish a connection. Because I think honestly, before that, you're in the money business. You understand economics. I think the average Joe, literally, I have a story about this. We had an employee who has a master's in geology, and a spouse that worked at the CRA for 25 years in finance. And when they were stimulating COVID, giving out the checks, right, to everybody in the, the CERB and all this kind of stuff, we were having a conversation on Zoom. And he goes, I don't know why you guys are so bent up about this. He goes, Canada's a rich country. We can afford it. And we're going, do you know where that money comes from? Like, do you understand that we're in debt, right? Like, we don't have, you have to print that. I thought Canada was a rich country. Well, what have we been paying our taxes for all these years? What do they do with it? Like, don't we have a bunch? Literally. So I think the masses, I mean, this is a microcosm, and poor guy, I'm sure he's listening to this going, man, I'm not trying to point you out. You're not alone. There's a lot of people out there that have a very limited understanding of this, and they literally think that. They go, well, Canada's a wealthy country, and we have all kinds
we are a wealthy country.
The government's in debt, but I'm not in debt.
But we are a wealthy country, but we've made bad decisions.
Right.
We have one of the biggest oil reserves, but we don't want to produce it because we want to be nice. Our pipelines don't cross the country. They go through the U.S., so now we're beholden to the U.S. They can shut the pipes.
Sure.
Yeah, no, I think, it's funny because that's my biggest peeve in that how we've managed the resources. It hasn't been as effective as it should have been. I look at how Chile deals with copper, which we love. Chile is copper, but we also understand that, hey, that's our main resource, and it has to be managed accordingly. We try to maximize that wealth. Here in Canada, look at the oil sands, where we're completely misusing a beautiful asset.
But do you think in like Argentina and in Venezuela, when their currencies were blowing up, when the show was coming to its end, do you think by that point, like at what point do you think it took before that? Where was the tipping point?
When they elected
the
Milei.
Masses went, holy shit.
You know what? That's happening now.
Well, that's what I'm thinking.
That's happening now because of Milei. And it's funny because I'm chatting with some Argentinian clients, and they're all, the discussion goes like this. Well, my neighbor just lost his job, but he was working for the government, and I was paying for him. But my taxes are down.
Ah, see? Okay, so the connection is starting to line up.
Yeah.
Right, yeah.
Right, and I think that's a connection. And it's funny because I've been thinking a lot about how Trump is going to play I think of chess games.
Yeah.
Right. So what's with all the tariffs? I think his game plan is this, because look, Medicare, Medicaid, Social Security are done. They're broke. The money isn't there. Right. Greenspan already said that. He called them entitlements. Not right. So they're done. The money isn't there. It'll never be paid out. So I think the give and take for Trump's going to be this. Okay, let's move over to a tariff-based system like the 30s and fund government with that. Now, that's going to be a very little money. So by default, you're going to end up with a very short Washington, which works to his benefit because he drains the swamp, which he's clearly doing.
Right.
Right? So he drains the swamp. But now he's got to deal with Americans themselves because they're getting taxed to the yin-yang, right?
So they're going to get their taxes cut.
No, they're not going to have any taxes.
Well, that's what I mean.
I think they're just going to say, you don't pay any taxes.
Yeah.
All of that money you gave the government, they wasted it. It's gone. Face up to it. But you're not going to pay any taxes. So you look after your own family. But we're going to have 2 tough years. Yep. Because we got to hit bottom here and rebuild.
And drain this mother.
And exactly.
Ever, yeah.
Right? But we're going to give ourselves this $5 trillion line of credit to do that, just like Roosevelt did. I think Americans are going to put up with that. But then how does the rest of the world deal with it? Because the rest of the world, our pension plans are sitting in U.S. assets that are going to devalue. Jesus. But, no, it's great. Because you know what? My gold and silver assets are going to revalue.
No, I always, when I say that, when I kind of wince at that, I know that we're the outside. I know, like... That.
Right. But the reason why that's important, because what we've done is we've built our own gold standard.
Right.
That's to the core. That's what I've been doing for clients, is set up my investment pools. It's funny because I've been told so many times, "What's with you and gold?" Right? Gold does nothing.
What's with you and
right?
gold? Yeah.
And now in hindsight, but stubbornly I just stuck to it because this is my, I call it a quest, whatever you want to call it, but this is my fight. This is where I'm doing my stand, right? Because I see the opportunity, but I also see as how I can help my neighbors, my clients, and calling with the people I know, everybody around me. How can I contribute to their family's well-being as they go through what my family went through our history in Latin America, right? And that's what's driving me in terms of the process. And what's funny is that, I look at my life and all the places that I ended up and how it all came together, right? Everything, the fact that I worked for on a bond desk with the old traders that worked under the gold standard. Then, how I ended up dealing with gold companies. Gilles Ouellet calls me up one morning. And he goes, "Hey, Carrasco, when I ended up building my book, I was at Burns Fry, becomes BMO." And he says, "Hey, Carrasco, you speak Spanish?" "Yep." "Well, you need to cover Barrick. We need a Spanish speaker to cover the stock option plan for all the employees." "All right." So that's how I ended up
Really?
covering Barrick
And getting into it.
and getting into it.
Wow,
right?
that's crazy.
That's how I met a lot of the Latin Americans that I know today from the mining side.
Mm-hmm.
So it was just circumstance. And I've always said, life's like a river. You might as well swim with the current. And that's what I've been doing. Right?
Yeah, it's funny. One of the axioms I hear, and I can't help but think of it when I'm listening to you, but in a good way, is I always get told, why are you so, Denny, with the gold thing or the silver or whatever it may be that I'm all passionate about.
Because you know history and economics.
And I'm stubborn about it. Well, I don't know them as well as you, but I know enough of them to be convinced. And so, and then they'll say to me, yeah, but that being early is the same as being wrong.
Not in this case.
No,
you know what I say?
Right,
I've heard that. I've heard that. And my reply right away is, I'd rather be early into the Titanic's lifeboat than be partying in the first deck, because that's exactly what's happening. And to me, the Titanic's already below water. What do I mean? So I see the Titanic as the monetary Titanic, as the Canadian dollar's in the fourth deck. The euro somewhere here, and on the top deck we have the dollar.
Fourth deck's the Canadian dollar, for
right?
Sure, yeah.
Because we have no gold. We're on steerage. We have no gold, right?
The euro is third deck.
And the U.S. dollars in the first deck.
Yeah.
2000 was the water level. When we broke through 2000, that gap started growing.
Right.
Right? So at $2,900 gold, we're just that much further away from my lifeboats, and I'm still floating here at the top. That's the way I see it. Right? And I'd rather had been earlier onto the lifeboats and have a massive lifeboat as I do. And now I'm just waiting. I'm just waiting for rescue and working from a position of strength, because I already did the tack that needed to be done.
Now, I don't want to keep you forever. How much? Do you still got some time, Jaime, or you got to go?
A couple of more questions.
Okay, yeah, sure. So we've Warren Buffett. Warren Buffett never classically touts gold, but obviously Americans and Canadians and retail and young people and old people together, everybody thinks Buffett's the best.
He is the best.
And so
he's compromised, though.
Right. And
let's talk about Buffett.
No, I want to, because I know this is a segue for that. So I think you should talk about Buffett. So he'll say, that precious metals, basically pet rock. And if you're going to invest in hard assets, buy agriculture, buy stately companies like Coca-Cola, things like this, brands, or buy real estate, right? A lot of people like real estate. Canadians, generationally, young people too. Obviously, we talk about how nobody can afford a house.
But yet he did buy silver once.
Well, this is so. But
yet he did buy silver for about 3 months, and then somehow that ended out of his portfolio. Remember that a couple of years ago, like the massive amount of silver. Now, go back to Buffett's father. Forget Buffett for a second. Anybody that says that Buffett doesn't own gold doesn't know Buffett, because he hasn't studied Buffett. Buffett's father was the advisor to Roosevelt that resets gold in 1933. And he wrote the most seminal piece on why gold is money. Anybody that really wants to understand gold, find that piece.
Find Warren Buffett's father, piece.
Senator Buffett.
Yep.
His piece on why gold and money are so important in freedom. It's a seminal piece to understand gold. So anybody that says that Buffett doesn't understand gold, he doesn't understand his childhood.
Right. Yeah.
Right?
So he knows it.
He knows it.
Yeah.
As much as I know communism and understand the defaults of communism.
Sure.
Right? Because my father was a communist. And I also understand capitalism because of my grandfather.
Yeah.
Right? Now, Buffett bought a lot of silver at one point. And Buffett was also bailed out of Wells Fargo in 2008.
Yeah.
So I personally think that Buffett, to some extent, is compromised. Because if it had not been for 2008 bailouts, Warren Buffett's name would be in the dirt, because Wells Fargo was still a bad bank. How many people have they cheated even after 2008? Sure. And it's been right in terms of commingling of assets, all kinds of things. But I think with Buffett is that silver hoard that has to do with something with. Now, I've followed it a bit, but I can't say I'm an expert, but it has to do with Bank of America, which was holding, so let's talk silver. The silver short, it all starts with long-term capital and the building of the bubble, what DiMartino Booth called the shadow banking system.
Yep.
Okay, that begins with the bailout of long-term capital. Who was the banker for long-term capital? Bankers Trust. How were they funding long-term capital? Through a short in silver. Who bails that out? Lehman Brothers. So instead of covering that short, Lehman Brothers assumed the short and makes it bigger. Who bails out Lehman Brothers? JP Morgan. They don't cover the short, they just made it bigger. Because credit bubbles, you solve that problem with more debt. You don't deal with the problem, you just make the bubble bigger. Goes back to silver, why I like silver.
Jesus.
On the backside of that, you have Warren Buffett needs a bailout. Bank of America bails him out, but uses that silver somehow in terms of a short contract, which now is I think that when you follow the repo market, something's happening there. That's why the price of silver is the one that we get over 33, 35 bucks, and the losses on that short become exponential. And I think sooner or later, when the whole system is imploded, that's when we're really going to see
They expose
exactly
what happened.
And the reason why I understand all this is because I was on the repo origination desk at Gordon Capital before they won Glass-Steagall, so I understand derivatives. We were creating them to the point that once Gordon Capital's management figured out what we were actually doing, they actually closed the desk because they realized, oh man, we could have gone bankrupt. Right. I was keeping Bombardier alive through repo trades because nobody would lend them money. But I was not using our money. I was going to RBC Dominion, borrowing bonds at 8%, selling them only for 30 days, selling them at the open market and lending them to Bombardier at 19%, making 10% spread.
Yeah, holy shit.
But if Bombardier had gone bankrupt, we were on the hook for it. That's the derivative. That's all it is. That's how this game.
That's just so crazy.
And the big difference is that back then we were doing that with about $100 million at 10%. Now they're doing it with that's a 10%. That's 1,000 basis points. Now they're working on 5 basis points, but with trillions and trillions of dollars, right? So they just created a bigger bubble, right? But it's all part of the same mechanism, and that's why the shadow banking system is so important, because that isn't even in the balance sheet. That's out in the euro dollar system, and that's the ether that nobody really understands.
No one really sees the back there.
Exactly. But I can tell you that that game is done because they haven't reinflated the credit facility that Biden put in, that $4 trillion.
Yep.
For the repo, we're down to zero on that. So I think they're imploding the system when I look at all of that.
They're not reloading that.
They haven't. That doesn't seem that Trump and Bessent want to do it.
Yep. Interesting.
They want to reprice the asset side of the ledger, not the credit side of the ledger.
Jesus.
Right.
Well, Jaime, we've learned a lot. We got into some weeds. I hope everybody listening thoroughly enjoyed having you in today, because I certainly did. I have to come back.
I will.
Hopefully we can make it a regular.
Maybe around PDAC.
Yeah.